There goes. There goes.
Excellent. Alrighty, everyone. It being the appointed hour of our meeting, November 17th at 7 p.m. Before we get started with the Finance Committee meeting, I'm going to read the following disclosure. Pursuant to Section 20 of Chapter 20 of the Acts of 2020, an act relative to extending certain COVID-19 measures adopted during the state of emergency, the June 30, 2027 extension granted by Chapter 22 of the Acts of 2022. This meeting for the town of Bridgewater will be fully remote and accessible to the public through remote participation to the greatest extent possible. No in-person attendance is permitted. Citizens who wish to tune in may do so via Zoom. Alrighty, now that I've read that, I've called to order. And before we get started, I did want to introduce two of our newest members, Miss Dana Sullivan and Mr. Christopher Raymond. They were recently appointed to our committee by the town council a couple of weeks ago, correct, Josh?
Yes.
Yes, excellent. So I have read their resumes, and I look forward to hearing from them in the near term. If they have any questions, you can certainly ask questions this evening. If you have any points that you want to bring up in the meeting, I ask just to adhere to Robert's Rules of Order. All questions are to go through the chair, through me, to those who may be in attendance to give us expertise, whether it is Ms. Garini, our finance director, or Ms. Perez, or even if the town manager, Mr. Casanova Davis, is here. All questions should be in the form of through you, Madam Chair, to whoever you're asking for, and then we'll do that from there. Alrighty then. Now that we've uncalled to order, let us do approval of meeting minutes from September 29th, 2025. I'm hoping everybody has had a chance to read through them. Any questions, comments, concerns, corrections that need to be made?
No.
Alrighty. Uh, if there aren't any, I would welcome a motion.
Motion to approve.
Motion to approve the minutes made by Mr. Lightford. Do I hear a
Second.
second?
Second.
Seconded by Mr. Knoll. Josh, could you take the roll call, please?
Second.
Sorry. I think Mark
Mark,
was
did
trying
you
to
say
say
something?
something.
No, I just seconded, put a second out.
Ah. Alrighty, so we have 2 seconds at least.
Yeah.
Alrighty.
MJ,
Aye.
Rig,
Aye.
Matt,
Aye.
Mark,
Aye.
John,
Aye.
Dana. Sorry, I think you might be muted, Dana. You might have an audio problem. I can't hear you.
Can we try now? Is that better?
Yep.
Yep, we can
Yep.
hear you
Sorry.
loud and clear.
I said
Excellent.
abstain. Thank you.
Okay. Chris.
Aye.
Thank you. The motion was approved.
Alrighty, thank you, everyone. We will move on to our next portion of the agenda, public comment. Prior to starting public comment, I will note to anybody who is from the public in attendance, please state your name and your address so that we may have it for the public record, so we can have our minutes be accurate. So, with that being said, I will open it up to public comments. Any members of the public who wish to speak? Okay, hearing none, we will move on to old business. We do not have any old business, so we will now move on to new business. We're going to start off tonight actually with a discussion about the FY25 audit. A little bit of information. Audits are done on a yearly basis pursuant to Massachusetts general law, and all towns and cities must hire an independent auditor to conduct a review of the records that are financial for the town. So in this case, the town of Bridgewater, the annual audit usually takes place, and correct me if I'm wrong on this, Laurie, it typically happens in the late summer, early fall, and is usually completed by the end of the fall, and a formal report is given to us by our auditors. And I believe we are joined this evening by our auditors in attendance, but before we start, I will hand it over to Ms. Garini to give a little more detail as to our auditors.
Thank you, Madam Chairwoman. So I appreciate you guys putting this to your agenda to just have a brief discussion. I know there's a lot of a lot of publicity as far as audits and municipalities and transparency, and for that reason, I thought it might be a good time or a good topic to just bring up in our auditors currently. I have our town auditors are Roselli and Clark Associates, and we have Paul Gargano and Don Piet here. They are partners in Roselli and Clark's law audit firm. So they have just started, well, they started probably 2 weeks ago compiling, information after we closed our book. So we do this on an annual basis. One or both of them and members of their team will come into the town hall and go to various departments. They have a checklist and documentation that they go into the treasurer's office, they come into the accountant's office, they go, they get water and sewer information. They go into all of the areas of the town to do their work. And I'm going to let them explain and go into detail a little more, but usually they're here for about a week. Sometimes if they need more time, they'll be here longer, but they're pretty thorough, and they keep us, right on the straight and narrow. And we're required to do this every year in order to keep our financial activities. We submit the audit to the DOR. I'm going to turn it over now to, I think was Don or Paul going to speak first, but
I'll start. I'm going to start for.
yeah, Paul will start. So here's Paul.
All right. Thanks, Laurie. Yeah, again, I'm Paul Gargano with Roselli Clark. And my partner Don is also going to speak after I get through. So what I thought I would do is just do a brief overview of, what we are hired to audit, go through a little bit of our planning process and how we look at transactions and things like that. I don't think we'll get into anything specific about FY25 as it is still in process. And then I'll turn it over to Don and he'll talk specifically about how, our approach to actually auditing the assets and the liabilities, and then we'll open it up to questions. Or actually, as I go through, if you want to, please stop me or Dawn, and if you have any questions, we'll try to address it as we go. So the first thing is we're hired to perform a financial statement audit. So it's just to determine if the town's financial statements are fairly and accurately presented. We go by materiality. So, again, we're issuing an audit opinion that the financials are materially stated. So, how do we do that? Well, we follow standards of the AICPA, obviously, but because it's government, we're also bound by government auditing standards. Those are issued by the Federal Government Accountability Office, the GAO. And also, since you spend federal money, there's also a uniform guidance audit by the Federal Office of Management and Budget. So these audits are highly regulated. In addition, we're part of the AICPA peer review program. Once every 3 years, we get audited. We have to hire an independent auditor to audit our processes and procedures. And then that goes through a regional peer review acceptance board. And even then, once they accept it, it's even subject to a further review by the AICPA. So again, we're very constrained. I mean, obviously there's auditor's judgment, and we want to differ in our audit procedures every year. You don't want to always follow the same process every year, but at the same time, we are required to stringently follow these standards. Our audit is not designed to detect fraud. However, there's an auditing standard, SAS 99, that requires us to inquire of management and staff about the risks of fraud. So we start our planning process by speaking with management, speaking with staff, asking, are there any, areas that you think are more susceptible to fraud? Are you aware of any areas, or are there related parties that we need to be concerned about as we're going through our procedures? Are you aware of any, issues with compliance with laws or agreements? So again, while our audit can't detect fraud, and it's not designed to detect fraud, we are required to build that as part of our planning process. So one of the things we do at the start is we have to perform a risk assessment on every major area. And typically, we've been auditing the town for well over a decade now. So we have a pretty good view of the processes and procedures, but every year something can change, changes in systems, changes in personnel, the regulatory environment. So we're always constantly updating our risk assessment. And based on those risk assessments, we'll design specific audit procedures. And again, town's pretty good. We don't usually identify any material issues, so there's usually no material changes to our standard audit procedures. But we are required to do those risk assessments regardless every year, whether we feel nothing changes or not. You still have to go through that process. And even throughout the audit, we're required to update our risk assessment as we go along. So the major thing we do in the planning process is we go over the internal controls over the major transaction processes. So that would be receipts, vendor disbursements, and payroll. So how do we do that? Well, over the years, we've developed process narratives. So we know how the town processes and the flows and the controls. But we can't just rely on those narratives. We have to make sure our understanding hasn't changed. So we do walkthroughs every year. So we'll take a transaction, we'll take a real estate bill, we'll take a water sewer bill, we'll take an invoice, and we'll take an employee payroll, and we'll walk it through the whole process to make sure that our understanding has stayed the same and that the controls that we understand are in place are still operating as they are intended. And then in addition, we'll do some other tests, like for receipts, we'll do a commitment test. So we'll make sure that, the assessor, the tax collector, the town accountant, they're all operating, with the same tax commitment. We'll compare it to the tax recap that you submitted to the state to make sure that you're not over, that the tax commitment isn't over what you're allowed to tax, things like that. And then for vendor and payroll, those two areas we usually look at the controls concurrently with the grants, because realistically your grant process shouldn't really differ from your normal town process. So this year in the case of vendor disbursements, what we did is we sampled 40 transactions. And we're looking at controls and compliance at the same time for those 40 transactions. So what we'll do is we'll make sure that every vendor disbursement is supported with an invoice, that it's approved properly by the department head. It's on a signed warrant, and then we'll also look for the compliance. Is it allowable? We'll look for improper. The biggest thing is improper payments. Is it made out for the right amount? Is it made to the correct vendor? We'll pull canceled checks for each transaction. So we'll validate, that the canceled check agrees to, the vendor agrees to the amount, the same name on the invoice to make sure you're paying, the proper vendor. If it's over $10,000, we'll check it for procurement. Have you followed the proper federal and state procurement law? And we'll also check, was it recorded in the proper period? Did you go over the period that the grant allows? Things like that. So we tested those 40 transactions this year. Payroll, typically, your grants don't, at least in the federal grants, you don't charge payroll, unless you have every once in a while you'll get like a fire grant where they support payroll. But for the most part, payroll will test town payroll transactions. So again, we'll test, is it supported by a timesheet? Does the department head approve it? Does the pay agree to the specific union contracts? Is it on a signed warrant? And then what we try to do each year is rotate the departments. So we don't want to always look at the same department. So I think last year we picked police, this year was fire, next year we'll do a different department. So we're always trying to, again, there's got to be some unpredictability. You can't look at the same things every year. So we're trying to rotate our procedures and what departments we look at. So that's pretty much our planning process and how we gain an understanding of our internal controls. Once we're finished with that, then we can go ahead and look at your assets and your liabilities and things like that. So I'll turn it over to Don and he'll walk you through that process.
Thanks, Paul. Yeah, Don Pyatt here from Roselli and Clark. So for the first step in looking at the balance sheet is obtaining the DOR balance sheet that Lori submits annually. That's kind of our starting point. That is compiled from all her ledger balances. So for instance, we start with cash, usually one of the biggest areas. We're making sure that cash in the treasurer's side is being reconciled monthly, that he's reconciling from the bank to his cash book, and then they're reconciling the cash book to Lori's balances. So we do that. We talk to them, kind of see where they're at each year, making sure that they're doing it on a monthly basis and doing it timely. We'll test the reconciling items that are on the reconciliation between the statements and the cash book, deposits in transit, transfers between banks. We usually get a listing of all the outstanding checks. We'll test those to make sure that the cutoff is proper. And then we'll also assist in preparing with the footnotes for cash, breaking out cash, investments by investment type, etc. Accounts receivable, same thing. We're taking a look at reconciling between the collector's balances to what Lori has on the ledger. They perform a monthly reconciliation, so we obtain a reconciliation for each receivable type. Mostly, real estate, personal property, motor vehicle excise, water and sewer. I believe there's some betterments there too. So again, we're making sure that reconciliations are being performed. We obtain copies of those reconciliations. And then for cash and receivables, almost everything's on point. They make sure that they're reconciled timely. And then Scott and Lori always work together to clear up any issues. So there's really no issues when we're taking a look at those sections. In addition to testing and validating the balances from her DOR balance sheet, there are some accruals that we'll calculate. So we take a look at 60-day receipts, taking a look at the real estate and personal property taxes that came in subsequent to year end to properly report revenue through June 30th. Same thing with unbilled water and sewer. We do a calculation of the next year's first quarter billing, take a look at that to see what was being billed that related to usage back to June 30th. And then there's other items like leases that per GASB we have to report, or the town has to report. So the town has a multi-year lease with the golf course that gets calculated to a lease receivable on the financial statements. And then the other big section within the assets are capital assets. Those aren't something that's reported on the DOR balance sheet. Those get reported on the financial statements from basically support that is maintained offline. So we'll come in and we'll talk to Lori about ongoing major capital projects. We'll look through the ledgers, take a look at any significant vehicles and equipment that are being purchased, and we'll help compile a list of those assets for the year. And we assist in maintaining the asset database. So in addition to having those discussions, we'll go through and we'll select a sample of invoices to test, make sure that the assets are reasonable and that what we're adding makes sense. We also do an analytic review of depreciation expense, making sure that that is reasonable as well for reporting in the financials. The liability side of things, most of what is reported on the DOR balance sheet is warrants payable, accrued payroll, short-term debt. So warrants payable and accrued payroll will pull the support that ties out to those balances. So warrants payable would be warrants that were processed after June 30th, but the bills relate to June 30th. So there's usually an entry done to accrue that expense back and properly report cash, warrants payable, and the expense. So we make sure that we obtain those warrants, make sure that they agree to the ledger and that they're all properly signed off on. A similar process for accrued payroll. And short-term debt, we have work papers that we track that activity. We'll take a look at any new issuances, make sure that it was properly recorded, properly reported on the DOR balance sheet. Long-term debt, again, that's not on, it's shown on the DOR balance sheet in like a sub in a sub column on the DOR balance sheet, and we'll audit those balances for reporting in the financials. Again, it's kind of like the short-term debt where we're obtaining any new debt schedules, making sure that the bond proceeds or bond payments tie out. And then we help assist in preparing the financial footnotes for those as well. Other items that are recorded as audit adjustments or financial statement adjustments are compensated absences. So sick and vacation accruals that that are governed by collective bargaining agreements. Lawyer prepares a schedule for us. We take a look at that schedule and we'll go through collective bargaining agreements to make sure what is being accrued is reasonable and is in line with those collective bargaining agreements. Other post-employment benefits, there's a valuation done, a full valuation done by the actuaries every 2 years. They use that valuation for 2 reporting periods. So each year of a new valuation, we'll obtain that census data and we'll test that data, taking a look at actives and retirees and tracing that data to employee or retiree records. And then from there, we'll take the annual report information from the actuary and assist Lori and the town in preparing all the financial statement footnotes and making sure that all the liabilities, deferred inflows and outflows are recorded properly. If you read through the financial statements between OPEB and pension, there's probably 10 to 15 pages of footnotes. A lot of information on there for OPEB and pension. And pension, that liability is calculated by a separate audit firm. They're hired by Plymouth County to come in and do their pension and 805 reporting, which they're auditing their financial statements, but then preparing also an allocation by community for their pension, net pension liability, deferred inflows, outflows, and all the reporting elements that are required under GASB. So we'll take a look at that report, make sure that everything kind of makes sense, that they've gone through a similar process that we'd expect them to, and then we assist the town in preparing those footnotes and getting those reported. And that's for the most part I'd say the big elements of the balance sheet. Paul, I'm not sure if there's anything you'd like to add or anything I missed there, but I think that kind of covers most of it.
Nope, I think you did a good job there. Yeah, I'd also, before we wrap up, and if you have any questions, by all means. But as Don indicated, reconciling cash, reconciling receivables, the main controls of the town have all, past several years have been, there've been no issues. Our audits are very smooth. One of the few clients that actually gets us almost everything on our checklist before we even come out. It actually makes for a very smooth audit process. It allows us to hit the ground on Monday or two, and then start to ask questions, good questions, do a solid audit instead of kind of chasing our tails a little bit, which unfortunately happens in some audits. But no, so hats off to Laurie and her team and Scott and everyone. They do a really good job getting us what we need and making the audit a smooth process.
Oh, thank you, Paul. Thank you, Don. I am going to ask if members do have any questions. Please feel free to ask them. If there's anything that may have been of any interest in their information that you may want to have a further elaboration on, I certainly will ask the question. If you could just give a little bit of detail as to what GASB is for those that might not necessarily be too initiative and into municipal finance as much as we are. I certainly know what the abbreviation stands for, but as some of our newer members may not, can you give a little idea of what GASB is for the most part?
Yeah, GASB is the Governmental Accounting Standards Board. So, FASB is the corporate, the private sector and public sector equivalent, but GASB is just for government. So yeah, unfortunately, they issue a lot of pronouncements, and we're always trying to play catch up, and there's always some new pronouncement. Unfortunately, even next year, there's one that may make substantial changes to the financial statements again. But yeah, that's what the GASB is. They're the standard setting board for municipal financial statements.
Thank you. Did any members have any questions?
And Madam Chair, I have a couple of questions if that's okay.
Sure thing, Mr. Knoll. What you got?
Thank you so much for sort of the breakdown in what you guys do. Clearly I did not pass my accounting class with flying colors, but I did pass nonetheless. That being said, I guess just a couple of questions. The first is, can you give some examples of what are some of the material issues that you're looking for that may come about? And then the second question, if you can speak to, what are the procedures to reporting issues that may arise, if any?
Sure. So I'll kind of start with the last question. So yeah, we're required to report anything we would denote as a material weakness or a significant deficiency in internal controls. That's primarily, and through that, you would find it in the uniform guidance report is where you would see that. In the financial statements, realistically, all you're going to see, you would look to the audit opinion, and in the audit opinion, it would state, that it states that there's a clean audit opinion that you've complied in all material respects. If there was any issue there, you would say we would actually have a separate paragraph and we would describe, what was wrong. Like Don said, you waited 3 years to get your OPEB valuation, and you didn't know because it has to be done every 2 years. So we would have to, do a modified opinion for that. So any financial statements issues, you would find the material issue denoted right in the audit opinion. So, any other issues, so there's, in the single audit, the uniform guidance, they call it, there's really two main reports. There's a yellow book, they call it, and that would have any material weaknesses or significant deficiencies over financial reporting. So as Don said, if cash wasn't reconciled by a material amount, if receivables weren't reconciled, those would show up in that yellow book report. And also any material non-compliance with grants and agreements. If we went in there and we found out you didn't procure a $5 million contract properly, that would go in there. And then the second report is the uniform guidance compliance report. That would be any compliance issues specific to a grant. So last year there actually was one just reportable condition related to one of your grants. It was they call it a cash management finding. So that was the town drew down money but didn't spend it in a short period of time. The feds don't want you to draw down money and then they want you to basically turn it around within 30 to 60 days. Whereas because there were multiple projects going on at once, the town drew down some money and it sat for a little while. So that was a cash management finding. So that was the one finding in the 24 report. And I know we've already looked at it. So, in this, we're also required to update any prior issues. So we've already, cleared that finding. So we would expect this year's report to be clean, and not have any issues. But that's typically what we're looking for. That's typically the issues that we highlight. It's either, major financial statement issues like non-reconciliation, and then on the single audit or the uniform guidance compliance report, it would be, federal compliance type issues.
Thank you. Oh, sorry.
Okay,
Please
no,
continue.
good. All right. I didn't know if there was any other specific issues you were wondering about, like specific areas or.
No specific areas. I guess I just wanted to wrap my head around, the weeds of, the work that's being done on behalf of the town and the citizens. So it was helpful that you gave a little bit more detail. Thank you.
All right. You're welcome.
Madam Chair, I just wanted to just point out,
Yeah.
so in prior years, back, Paul can probably attest because Roselli and Clark have been doing our books for a number of years, but we did have some findings that we would correct, right? So in the management letter, I think, 10 years ago, we had tailings. Tailings came up every year because we didn't have, the staff to do it at the time. So there were things like that that they find as weakness or an internal control or a finding. So we had a few other things that related to our maybe our processing and our like our tax title process wasn't really laid out in full, 10 years ago. But, over the last 5 years and plus, we turned around all of our our processes and our reconciliations, and so we built up a good finance team with checklists and things like that. So when an audit comes out and they notice something, they expect management to take a look at it and correct it. And every time that has come up, and we take it seriously, and we work to fix it right away. So those things have gone away. If anything else new comes up, then we obviously look right to it to fix it right away. So, I mean, to your question, Reg, yeah, we've had a couple of things over the years, over the last, 20 years. Like 10 years ago, we had multiple issues in one audit. It was like, our receivables were higher than they should have, like just questions of how we were doing things. And we went to work and got the people, got the positions, and we have a good finance team now. We have a good treasury collection. They have good people in there that work on all these things. So, I mean, that's kind of what they see as they're going through their process, and they bring it to the management's attention. And it's up to us to fix that. Or what happens is when they come back next year, they say, "Oh, we see that this is still a problem." So, and it'll say continued from the prior year. So that did happen, 10 years ago. We had a lot of different findings, but we've worked over the last, certainly the last 7 years we've fixed all those internal controls. So.
Thank you. Madam Chair, I do have one last question that just came to mind as Lori was speaking.
Yeah, sure thing.
I guess I totally understand the reason for rotating departments and conducting those audits via different departments year in and year out. Is that the same sentiment with respect to perhaps rotating auditing firms every 5 years just to kind of look at, get different perspectives? I'm just trying to understand what's the town's position, just to kind of, just get. I'm not sure if I'm phrasing it correctly, but I think you kind of understand where I'm going since you're nodding.
Yeah, no, I can speak to that because I'm sure Paul and Donna, they can probably speak to that. We've engaged with Roselli and Clark, where this I think is the last of a 3-year engagement. So Justin and I will be, looking at that, and it's certainly a consideration. We always look, there is a lot of well, there's not a lot of audit firms out there, unfortunately, either. So, but I understand your question, and we do go through that process as well, Rick.
Thank you.
Mhm.
Did any other members have any questions or comments?
Madam Chair, I just have one quick one. So,
Sure thing,
Don,
Mr. Higgins.
yeah, very nice to meet you guys. It's my first year on the committee as well. But so just for the new people's understanding, so we have about 60% of the money goes off to the school side, and that gets audited separately. But is there any kind of relationship between you and the school auditors, or to see about, or any kind of cooperation, or is it really treated as two separate entities?
It would be treated as two separate entities. Yeah. The regional school district has their own auditors. They complete their audit completely separately from us. That we do have engagements where, let's say, there's a light department. So in that case, all right, the light department may have a separate auditor, but it's still brought in to the town's financial statements as what they call a component unit. So it's still a department of the town. So in those situations, they're kind of like a group audit where we would have to coordinate with the auditors of that light department or other component unit. In this case, like you said, it is just a complete separate organization. So we will do some, we would look at one of the things we do every, not every year, but we'll do like an educational assessment test. So we'll match up the educational assessments to the letters and make sure you're paying the correct amount and things like that. But for the most part, as you said, the money gets sent as an assessment, and then Bridgewater Rainham conducts hires their own separate audit firm to do that.
Okay, thank you.
Yeah.
Okay, thank you. If any other members have any other questions? All right. Not hearing any further. We'll definitely move on. Paul, Dawn, thank you for attending our meeting this evening. We really appreciate it. Members, if there are any questions that you aren't able to think of this evening, but you may have queries for the auditors, please feel free to send them to Josh, and we'll have them sent over to Lori to get any clarification or any answers. Obviously, time dependent. But gentlemen, thank you for coming in this evening and speaking with us.
Thanks for
welcome.
having us.
Thank
For
you.
having us.
All righty, everyone. Now we'll move into the further meatier details of our agenda this evening. We are going to move on to Order OFY 26-030, FY26 Classification Tax Allocation, Adoption of Residential Factor. I'm going to actually scroll down. If folks do have their agendas open, please join me. I'm going to actually read off the explanation. The town council shall annually first determine the percentages of the local tax levy to be borne by each class of real property as defined in Section 2A of Chapter 59 in personal property for the next fiscal year. In determining such percentages, the town council shall first adopt a residential factor. Said factor shall be an amount not less than the minimum residential factor determined by the Commissioner of Revenue in accordance with the provisions of Section 1 of Chapter 58 and shall be used by the Board of Assessors to determine the percentages of local tax levy to be borne by each class of real and personal property. So a little bit of additional detail. This is done on a yearly basis, and most towns and cities must have their tax rate set before the end of the year because most towns and cities are on a quarterly tax basis. Some are semi-annual, but the tax rates must be set before the end of December in order for real estate and personal property bills to go out before December 31st. If the tax rate is not set, well, we get in trouble with DOR. But before that even gets to that point, we get to determine our factors for our taxation purposes. So that being said, we do have Miss Shelley McCauley here, who is our town assessor, and Lori will also be able to answer any questions. But Shelley, I believe this is your time to talk to the committee.
Yep. So good evening. And for those who don't know me, my name is Shelley McCauley. I'm the Chief Assessor for the town of Bridgewater. And I am here tonight to explain the residential factor. At a minimum, the town must determine a residential factor, which will determine whether the town will have a split rate for its residential class and commercial, industrial, personal property classes, although there is an option to provide a separate open space discount under the statute, as well as a residential exemption or a small commercial exemption. I will only be discussing the residential factor tonight. As noted, the town council must decide the percentage of the tax levy each class of real property and personal property will bear each year. To do so, a residential factor is adopted. The residential factor governs how much the residential and open space classes versus property tax burden may decrease, and consequently, how much the commercial, industrial, and personal property classes, the SIP property tax burden, may increase. The adopted factor cannot be less than the minimum residential factor calculated by the DOR. The MRF for the fiscal year 2026 is 91.51%, and it represents the maximum shift allowed in the tax levy for the year and establishes the parameters of local decision-making. I performed a calculation option table, which represents the shift range from 1 to 1.25 in increments of 5% to illustrate the respective shares of the tax burden and the anticipated tax rates for each class. When there is a shift in the percentage of total taxable value between the property classes RO and SIP, it affects the total amount of taxes can be paid by each class. So the higher the percentage of total taxable value for a property class, the higher the amount of taxes is paid by that class. Conversely, the lower the percentage of total taxable value for a class of property, the lower the amount of taxes paid by that class. It is important to note, although the council is effectively choosing the SIP shift, it is technically selecting the residential factor. If a residential factor of 1 is adopted, the tax rate would be the same for all classes. This rate is determined by dividing the tax levy by the total value of all taxable property in Bridgewater and then multiplying that result by 1,000. This year, our values were certified on November 3rd, and it was 5,338,923,041. What did I say? Yes, I said it right. And our levy is 64,227,244, which equals a tax rate of 1203 estimated. If the average single family for 2026 is 616,769, up from 593,992 in fiscal year 25, which is a 3.8% increase. If the tax rate of 1203 is approved by the Bureau of Accounts, the average single family tax bill for fiscal year 2026 will be up 7,420, up from 7,027 from 2025, which is an increase of $393 or 5.6%. Just for a side note, fiscal year 24 was increased by $219 or 3.2%. The average commercial value of classes 300 through 393 for fiscal year 2006 is $1,143,575, down from $1,142,124 in fiscal year 2025. If the tax rate of 1203 approved by the Bureau of Accounts is approved by the Bureau of Accounts, the average commercial valuation for fiscal year 2026 tax bill will be $13,740, up from $13,529 from 2024, an increase of $211 or 1.6%. Just for a side note on that, in fiscal year 24, their average bill went up $909, which was a 7.2%. So our debt is $6,117,445 divided by our value of the town comes out to $1,1458 rounded to $1.15. This approximately adds $708.61 on the average single family tax bill, which is an increase of $148 on the average single tax bill from fiscal year 2025. Historically, the town has always adopted a single family tax rate.
All right.
And that's it.
All right. Thank you, Shelley.
You're welcome.
So, Madam Chair, I'm just going to share Shelley's screen. So we have a tax here. The tax recap hearing is going to be before the council on I think it's December 2nd. So Shelley's we have the presentation almost ready. So we will share that packet with this group. But we wanted to make sure we had everything, we captured everything. So we didn't want to share it like 5 minutes before the meeting. So we can share the presentation. I can send that out tomorrow. That just kind of gives everyone an idea. I know these numbers are kind of crazy when you're talking about millions of the levy and the values and everything. But you know, Shelley goes through a very complicated process, and you know, we just wanted to, you know, share what's going on right now, but we will send the whole full presentation to you before the tax hearing on the 2nd of December. So
thank you for sharing that, Lori. So the one thing I will definitely note before we move into asking any questions or inquiries. So this is a process that is done every year. And the town, for the most part, has not gone anything higher than a single factor for residential. As it relates to the fact that the town has the Community Preservation Act on our real estate bills, how much do you know how much that actually affects our CPA charge on each of the bills? I do know that in some municipalities, I believe it's there's a $100,000 difference. It's the first $100,000 I believe is exempt from CPA. So I just want to
Yes.
make sure we have a clarification on that for the members that are new.
Yep. It's 2% and it's $100,000 exempt on residential.
Okay. And the other follow-up question I have is, Laurie, correct me if I'm wrong on this, but I know that in previous years there has been a question that's come up that's been why have we only gone with a single factor? I believe it is because of the fact that we do not have a sufficient amount of commercial base to support having a split tax rate. There are some towns and cities that are split where one tax rate is just solely for residential properties and one is solely for commercial industrial. And sometimes they tend to differ it a little bit on the personal property, but there's not that much of a big difference. So it's usually commercial, industrial, personal. We do not presently have that sufficient enough of a tax base to have that split rate to support that. Is that correct?
Yeah, and I'm gonna let Shelley talk more about that, but yeah, you know, again, she's been doing this a long time and so she can better explain maybe in layman's terms to the committee, Shelley.
Yeah. So that is partially correct. We have to consider, if an increased tax burden to the commercial side will it significantly lower the residential side. And if we just shift it at 5%, then it would be a $62 savings for the residential side. But on the commercial side, hold on, I'm sorry, I'm trying to get my my screen just went blank. Okay, here we go. On the commercial side, it would increase them $685. And if we did it at 25%, say, the residential side would save $315, but the commercial side would have an increase of $3,438. So we want to be very careful that, if we want to keep our commercial base in town, that we don't want to adversely affect small businesses and drive them out of the community. And we don't want to make sure it also doesn't slow the development of any business coming in. And also, the reason we have assessments is to make it fair and equitable, and that's why we have assessments to begin with. So those are pretty much my answers. Does that make sense to everyone?
I do have a follow-up, since we have you here present tonight, as it relates to assessments. So, if you could help explain, just in general terms, I know that from an assessing standpoint, all properties are assessed at a fair cash value, not the fair market value, but market factors do
It's
have
the
an
same
effect.
thing.
Yeah. Okay. Yep.
It's the same thing.
Okay. Yep. All right. Did
MJ,
any other members have any questions?
I do have a question. Shelley, that was a lot of information very quickly. So
yes,
if we look at the whole thing, and maybe I'm just slow tonight, I'm not sure, but what is going to be the overall tax increase on average? Did you say including the debt and the CPA, it's going to be 7.2% in total?
No. Nope. For a single family, for the average single family home, there's going to be a increase of $393 or 5.6% from the year before.
And does that include all the debt overrides?
Yep.
And the CPA as well? Okay.
Well, not the CPA. This is just the real estate side.
Okay, so then there would be an additional 2% on top of that when it exceeds the 100. I'm sorry.
After you deduct 100,000 off their assessment.
Okay. And that isn't included in the calculation here.
No, this is just strictly the real estate side.
Yeah.
Okay.
The CPA will show separately on everybody's bill. And it does factor in the first 100,000 is exempt, so. And you just take the 100,000 and there's a pretty simple calculation that Shelley taught me. And I can send it to everyone, how you would get that. Because you would use the tax rate, divided by the 2%, so. I can send everyone that if you want to figure out your own.
Yeah, I'm just trying to get a percentage for most the common people are just going to say, so what's the percentage it's going up, on average?
Right.
So
Yeah.
Okay, Lori. All right, thank you.
Mhm.
Did any other
Hold on.
members have any questions? No additional questions, folks?
We're gonna scare the newbies away with the auditors first and the tax recap second.
I guess,
I'm fairly confident we haven't.
MJ, I have one other question. So, Lori,
Sure thing.
what did we factor into the budget for 2026 as an increase in the property tax?
Well, this is when we set the tax rate now, John. So when people got their first bill of this fiscal year, it was a preliminary. So it's an estimate, which is the same exact valuation as last fiscal year. So now when we set the tax rate in December, then we recalculate everybody's, values based on the new tax rate that we're going to set, and then the actual bills will go out at the end of December. So yeah, when we do our calculation, I'm sorry, I'm not answering your question, but in the budget, we take the last year's levy, we increase it by 2.5% with new growth, and we do factor in the the change in the levy. So
then overall, what was the percent increase we put in the budget for fiscal year? I guess it's 26 now, right? Yeah.
I don't have it in front of me, but we take the factor of the 2.5% on top of the levy plus new growth, plus the debt. And then we also have our local receipts that we, calculate maybe 3.5%. And then we also factor in any other sources that we've used to balance the budget. So I don't have the exact number of what the budget increased, but I can get you that.
I also just figured out the CPA for you. On an average single-family home, it would be $7.45 increase.
Thank you, Shelley.
Mhm.
Did any other members have any questions or comments? All right. Hearing none, I would entertain a motion.
I'll motion to approve.
All right. Motion to approve made by Mr. Higgins. Do I hear a second?
I'll second.
All right, seconded by Mr. Thomas. Josh, could you take the roll call, please?
MJ,
Aye.
Rig,
Aye.
Matt,
Aye.
Mark,
Aye.
John,
Aye.
Dana,
Aye.
Chris,
Aye.
thank you. The motion was approved.
All right, thank you, everyone. We will now move on to our next item. Order OFY-FY26-031, transfer order for prior year bill sewer fund. So this is a prior year bill that was not processed in FY25, unfortunately, but it is something that we can now pay at this point. Just a little bit of background for folks. Typically, after the close of a fiscal year, towns and cities typically have until at least Laurie, correct me if I'm wrong on this one. It's usually the first or second week of July to do any remaining prior year bills, correct? And then those bills are paid. However, sometimes we can have bills slip through the cracks, and this seems like one of those rare instances where that did happen. So, with that aside, I will open it to Lori to give us a little more detail on what the bill is.
Yeah, so this is an operation bill that again came in after the books were closed and it wasn't encumbered. So it was for some chemicals in the sewer department. So the order is not appropriating additional funds, but we are appropriating funds that are currently already in the budget to cover this cost. So
I will open it up to any members that may have any questions or comments. All right, hearing none, I will entertain a motion.
Motion to approve.
Motion to approve made by Mr. Knoll. Do I hear a second?
Second.
Seconded by Mr. Thomas. All right, Josh, can you take the roll call, please?
MJ,
Aye.
Rig,
Aye.
Matt,
Aye.
Mark,
Aye.
John,
Aye.
Dana,
Aye.
Chris.
Aye.
Thank you. The motion was approved.
All right, thank you, everyone. We will now move on to the next item, Order OFY 26-032, a transfer order for contractual payments. I'm just gonna move my documentation down to that one. Let's see, explanation. This is going to be payments for employee contractual obligations that are for fiscal year 2026. We do have an amount of about $74,402 going from various accounts that are listed on the chart in our packet to be used on various items. So we're seeing monies be moved from the employee liability fund, water retained earnings, sewer retained earnings, to then be moved into the salaries for fire, library, sewer, and water to go match from that first total to that total again on the other end of it. So, Lori, if you can give us a little more detail, that'd be helpful.
sure, thank you. So this is an order that we are transferring funds from our one-time liability fund for the general fund portion of the obligation. So that will be transferred. You see 51,802 will be transferred to the fire salaries and the library salaries. And then we have an amount from water and sewer retained earnings that will be going into the water and sewer contractual buyout for the water and sewer superintendent retired. So contractually, he was due a payment, and so his pay was split between water and sewer. So that's why you see those source of funds. And then the general fund is going to, we had a library employee leave, and then the other one for the fire is a contractual buyout for the fire chief. So when the fire chief became the fire chief, he was in the fire union, and part of his contractual part of his contract was that he was paid a sum, not all of his time, but over the 25 years he had accrued some time, and he wanted to once he became fire chief, he wasn't allowed to have a sick buyout any longer. So he did make a part of his contract was to get a portion of his sick paid out. So this is payment number 2 of 3 for the 49,900. So.
All right, thank you, Lori. Are there any questions from members or any comments regarding this measure that's before us?
Yeah.
Sure thing,
I
Mr.
have
Higgins.
one. I'm sorry, MJ, to Chairman. So Lori, he's not allowed to have it, yet we negotiated into the contract. When was that contract negotiated?
2 years ago. So, yeah.
And is it all included in this employee liability fund? What's in that fund? How much is in there, and how many more of these are to come?
So this this is a personal contract with the fire chief. So this is the only one that there is any obligation left. You know, the police chief and the fire chiefs come out of a very strong union. So they have a benefits, and sometimes an internal candidate can, you know, take advantage of being an internal candidate, as this one did. So, inside the employee liability fund, we have, let me see. Hold on. I had it here somewhere. But yeah, this really is unusual because, yeah, that's really all I can say. But it is a contractual obligation that the town signed.
Wow. And so back in the employee liability fund, can you give the
Oh.
committee the balance of that, please?
Yeah, sure. Yep. Sorry, I usually have it on my little cheat sheet.
No, that's okay. Take your time, or if you have to get it back to us. But I mean,
Yep.
this, yeah, I'm sorry. Go
So
ahead.
right now there is $53,221. So if you remember back when we balanced the budget in August, when we had the supplemental appropriation, we moved $450,000 out of this fund to cover the
Mhm.
general fund. And we expect, next week, next agenda meeting, Tuesday's meeting, we will have our free cash appropriation going before the council, so that will be referred to this group on your next meeting. And we'll be replenishing this fund with a transfer back into that for 475,000.
So I guess so we did kind of we kicked the can down the road from 2025. We took 425 out of the reserve. We put it in here. And just for my being a new member and all the new members here, since this is a contract, if we voted no, what would happen? I mean, we don't really have a choice, right?
Yeah, it's a legal binding contract, so yeah. But it's an appropriation order that will be in front of the town council, so.
Because to me, it just seems, well, I'll hold my peace at this point, but that seems like a lot of money for a personal time buyout. And we've been told a couple of times now that we're trying to get out of the business of buyouts,
Right.
vacation buyouts of personal time. And first thing we've got is we've come up 51,000 seems like just a lot of money.
So I'm
Right,
going to chime in
and
real quick here. Hold on, Lori.
yeah,
And I appreciate
thank you.
Lori's done this. Thank you. This is Justin Castanuez. The town has adjusted and moved away from vacation buybacks and sick buybacks. This contract, as Lori said, was negotiated some time ago. There was a significant balance on the chief's contract, but we're not going to get into that because we don't talk about personal contracts. That's not in the purview of the finance committee. But the town has done that work. Lori's been a good part of that. We've shifted away from our other union groups as well in terms of vacation buybacks and sick buybacks. So we have done that work. Obviously, when we move forward, we look at how we're going to address contracts moving forward. But I just want to be very clear: the town has shifted away from sick buybacks and vacation buybacks. The liability has gone down significantly in these past few years.
Thank you, Justin. Are there any other members that have any questions?
Madam Chair, just one question.
Sure thing, Mr. Lightford.
So and I want to stay away from the personal employment contract, but if someone with the length of service to the department that the chief had at the time of his appointment had retired, Laura, do you know if such a person would be entitled to full sick payout?
Correct, that is correct. Yes.
Okay.
Thank you, Mr. Lightford. Any other members?
I just have one question. I think Lori had already mentioned it, but I just want to make sure that I heard it correctly. So
Sure,
this
Mr.
is payment 2 of 3. So there's one more payment of 49.9 that we're going to be voting for down the road.
And Yeah, whatever the contract date, this was number 2 of 3, yes.
Okay, thank you.
All right.
Hmm.
All right,
But,
thank you, Mr. Knoll.
oh,
Yep, Mr. Higgins?
yeah, just as a follow to Rigo's question there. So we put the 425 back into the account, and another 51,000 is going to come out of that. What is the remainder going to be used for? So that would leave a balance in that reserve fund of about 385. What would that be used for then, Lord?
So we're expecting some retirements in the next fiscal year. So yeah, we're just putting some money aside for the remaining buyouts that are out there.
But
I
one
mean,
one thing I'll add to that,
Mhm.
and sorry, Lori.
No,
One thing that
okay.
I'll add there is what we do, John and everyone on the committee, is we will look at our personnel. We'll look at likely retirements or anything or liabilities associated with that. We plan for them. We'll connect with our department heads to just see where personnel are, any planned retirements, et cetera. If there's any planned retirements, we account for those. We budget in that fund. This fund is an in and out fund. That's how we look at it. But we also put a little bit more to protect us because there are some things that we don't account for. We also obviously have another reserve that's a one-time unforeseen where we have some flexibility there as well. But we plan for these things on a pretty consistent basis. We had a conversation today with the fire chief about planned retirements coming forward. So we're really evaluating our personnel. We budgeted accordingly. So I think that's something important to note.
I hate to keep asking questions, but Justin, so when someone retires, what would trigger more payments to them?
It really depends. It really depends on, what collective bargaining unit they are, et cetera. It really depends. But I mean, at the minimum, generally speaking, there's a requirement, a state requirement that people have vacation time. You have to pay out their vacation time if they haven't utilized it all, right? But it really depends on the collective bargaining agreement unit. If it's a member under a collective bargaining agreement, it's really specific.
Thank you.
You're welcome. Good questions. These are good questions. We don't
Madam
mind them,
Chair,
right?
Yes, Mr.
sorry.
Knoll.
I do have another question. I guess I'm just trying to. I certainly understand the contractual obligation of these types of things, and I'm excited to hear and have seen the town, um, you know, have these discussions to make the appropriate adjustments. I guess my thought process is, and Lori had mentioned, these. I think you had made a statement that the unions are pretty strong, to that effect. Um, it, uh, Given that be the case, right? Is there, what is the town's position? Let's say, for example, if if and when one of our chiefs retire, right, and it's recommended by the union, what is the town's position in actually making, before going into these contractual agreements, right? Um, Putting this out to the public and seeing how the public feels, because it
Rick, respectfully, I'm not going to talk about that at a FinCom committee.
understood.
This isn't the purview of the town council. It isn't the purview of the FinCom committee, and I don't think it's prudent to have that conversation here.
I appreciate it. Thank you, Justin.
Yeah, no problem.
Thank you, Justin. Are there any other questions from the members? All right, hearing none, I will entertain a motion.
Motion.
Motion, what is your motion, Mr. Thomas?
Motion to approve the payout.
All right, motion to approve. Mr. Thomas, do I hear a second?
Second.
Seconded by Mr. Lyford. Josh, can you take the roll call, please?
MJ,
Aye.
Rig,
Aye.
Matt,
Aye.
Mark,
Aye.
John,
No.
Dana,
Aye.
Chris.
Aye.
Thank you. The motion was approved.
All right, thank you, everyone. We will now move on to the next item on here. It will be Order OFY 26-033, transfer order for CPC engineering for multifunctional fields. There is a packet of information for a CPC application that was put forward. This is for fields that are at the Bridgewater Middle School to make some changes over there and request for funds to make at least a part of the phase of that project occur. So it looks like we are looking to have the vote of appropriation of $25,000 from undesignated funds to fund phase one of that process. And I don't know if folks had a chance to read the CPC documentation from our friends at the Community Preservation Committee. There is documentation that is required. There's an application. There are letters of recommendation and also detailed documents as to location and place of where the project will take place and the work to be done. But that being said, if not, we will have a summarization from Lori and, if need be, also from our town manager, Mr. Casanova Davis.
Thank you, Madam Chair. So as in your packet tonight, you can see that the CPC committee met and they take applications for projects that can be used with CPA money. And this was approved by the CPC committee, and we have letters of recommendation. I think Mr. Thomas is here. He could probably tell you, but it's just phase one of using some funds to get an engineering study to construct the fields behind the middle school that can be used for multi-function and town recreational sports. So if Mr. Thomas has stuff, he could tell you this project better than I could, but it is part one of trying to get some more fields for the kids in the community.
Absolutely. It's a great use of CPC funds. Currently in middle school fields, lacrosse, our youth lacrosse program practices on those fields, and 2 of our youth football teams practice on those fields. They're beat up and have not seen any care in, I think, decades would be a kind timeline. So all we're looking to do over there is, and the money, everything was approved, and it's already had the first reading by town council. Now it's to us to discuss. They're leveling out the fields, going to add some irrigation. There's an old tennis court there, not the tennis courts that were used previously by the high school, but an older one that's out back that's going to be destroyed, removed. They're going to have a lacrosse wall put up. And then if funding allows, they're going to try to have some lights there, but if not, get the conduit in the ground for future lights there and stuff. So it's an area that's beat up, needs some care. They're very valuable fields to the youth sports programs as well as the community, because it is public land, so it will be open, to the community to use as well. If there's one of the questions that came up with this, because where Park and Rec is very strapped and under budgeted and underfunded, if there was a gap in who was going to maintain the fields between Park and Rec, the school department and whatnot, Bridgewater Lacrosse League and the Youth Football Association have agreed that if there's something that needs to be done, whether they hire landscapers to come in or whatever it takes to get done, everybody that's involved with this project is on board and would like to see it moving forward.
Thank you, Mr. Thomas. Before we move on with any additional questions, Justin, I just want to ask a quick question as to procedure. Because Mr. Thomas is on the Park and Rec Committee, but he's also a member of the Finance Committee, there's no perceived conflict of interest in this situation where he'd actually be voting on a financial matter that relates to a committee that he's a member of that has thrown some type of endorsement in for a financial matter. Is that correct?
MJ, I think I caught a piece of it. Sorry, I was looking at my phone at the same time. I think you referenced that Mr. Thomas is on the FinCom. He's on the Parks and Rec Commission. Are you asking whether he should abstain or not? Is that what you're asking?
Yes, I just want to make sure. So, I try to watch out for my members and make sure everything's okay and copacetic and on the up and up. So I just want to make sure there's no potential conflict for him since he is on FinCom, but he's also on Park and Rec.
I don't necessarily see a conflict. I don't think he's benefiting financially from it. I mean, we've had, for example, Um, the CPC, a good example is uh, the CPC, we have representatives from other boards and committees that are representatives of it. I think he has to make a determination if he wants to abstain. I don't see a financial
Yeah.
conflict for him.
I haven't seen when you're on two committees, I haven't seen that there's a conflict if
Yeah.
you're for one community thing. I mean, he's also a resident as all of you are, so you know, you can have an opinion without a
Yeah.
financial interest.
Yeah. I think the key thing is that he doesn't have a financial interest. If he did, then obviously then he should abstain. But to my knowledge, Mr. Thomas can speak for himself. I don't think there's a financial interest.
MJ, I can make it easy, so there is no issue as long as everybody votes the way I want it to go. I will.
I knew that was going to come up, Mark. Thank you.
Madam Chair,
Yes, Mr. Knoll.
before you proceed with that question, I guess full disclosure on my end as well, given that I am a town resident. I'm also a member of FinCom. However, I do rent fields at the middle school. Though it's not the opposite side of where lacrosse and the Badgers play, but at some point in time, we may very well be renting that space as well. So I just want to make sure that I remain compliant, and not creating a conflict of interest. So how does, I guess that's sort of like my situation.
So in the event that a member may perceive a conflict of interest, they can indicate that to the committee, and they may abstain. Justin, do they have to file any type of paperwork disclosure?
I
don't
think
think
you
for
already
this-
did, Rick. I
Yeah, I
think you
think Rick already
did.
did this, right?
Yeah.
Yeah.
Okay.
I did, and if I'm not mistaken, actually I don't remember exactly the conversation, but I just want to make sure that I'm good.
Mhm.
I think
If-
obviously in these situations, Rick, I remember, and Lori's correct, you did. I think, if there's any concern, my recommendation, obviously, I'm not an attorney and these are coming at right now. I would just abstain, right? Just to be safe than sorry at some point. If you have that question, that would be my recommendation.
Understood. Thank you, everyone.
All right. Thank you. Do any other members have any questions or comments on this measure?
I do. I'm kind of confused here a little bit.
Okay, Mr. Higgins, what you have?
Yeah. So what actually are we voting for here? Because I go through the whole application, but down under other, it says there's up to $1 million in CPA funds and then $500,000 in other funding for 1.5 million.
This is all we applied. Well, not me, but the people that applied for here was $500,000. So anything about I don't know what, I don't have the paperwork in front of me, but it's $500,000 is what the total project that we were approved for from CPC.
And this particular order, John, is just for the engineering.
It's just for, yeah.
Yeah, it's for the engineering, and it's coming out of undesignated funds for $25,000. So that's all that's in front of you tonight.
Right, but if we go vote on the 25,000, have we started down a path for 1.5 million, or is this thing capped at $500,000? And then I guess my follow-up question would be, since this qualifies for CPC or CPA funds, would the maintenance of it also qualify to keep the fields up and running so we don't have to rely on Badger football or whatever to keep it up to some kind of a standard?
That's so. Sorry, Lori.
Yep.
One of the reasons why it's important, why we wanted to get, and it's not, I say me, but it's not me. It's CPA, and then the people that are working with them. I just happen to, be very apprised of the situation. We've got to get the engineering done so that we can get an actual scope of the project, and then once we get the scope of the project, then we can we can present it to the school department. They've been mowing the fields all these years anyway. We're not adding any square footage, so odds are they're going to continue mowing the fields. If not, we look at the scope and then we go from there. If there's CPC won't give money for this project for future maintenance on it.
No.
So it falls back to, obviously, if the school department didn't do it, it goes, in theory, I suppose, back to Park and Rec. But the other organizations involved, because that was one of the concerns of Park and Rec, was it's adding more burden on them. But if it has to fall to lacrosse and the football to maintain to mow the fields, essentially, then they would take care of that. But once we get the scope established, once the engineering's done, we get the scope established, then we go back to the school department, and then once everything is engineered and on paper, then can make a commitment to Park and Rec that they'll take care of the fields. So that's the best we can do with that right now. But until we get the scope and the engineering done, then we can't have that conversation with them.
Yeah, CPA funds aren't allowed to use for maintenance, so unfortunately, for any project, actually.
Madam Chair, I do have a question for Mark. Just a follow question.
Sure, Mr. Knoll.
I guess my question is related to the other side of that fence.
Yep.
Does that $25,000 for the engineering also include looking at the scope of the other side of the fence, the football field side, because and as well as the baseball field, given that it's realistically it's one big field with a fence dividing the football, baseball, and the opposite side with the tennis courts and that side of the middle school.
No, right now the scope of the project that they're engineering is just on that back side of the school, the entrance to central office where the tennis courts are. Everything behind the old football field is what this project pertains to.
Okay.
Thank you, Mr. Knoll. Are there any other members that have any questions?
I do have one last comment. So again, we start the process, but we just now went through an override where the school doesn't have money, the town doesn't have money, and now we're going to go and say, okay, we're going to start maintaining more infrastructure that nobody right now has any idea how the town's going to pay for it, whether it be the school side or the town side. I would love to see the fields in place, but I think that there's other priorities we need to go work on. But again, with the override failing and the school saying that they're going to be running a structural $1 million deficit, to have them continue to or rely on them to do any of this work would be crazy, or it doesn't seem feasible to me. I shouldn't use that word crazy, but and the same with the town. You've already said, Mark, the town rec department doesn't really have the time nor the resources to do it themselves. And so here we are, we're going to start down a path here that we don't have a way to sustain it, in my mind.
Well, John, right now, if we do nothing, first of all, the funds have already been approved from Park and Rec. So not from Park and Rec, from CPC. So we're already heading down the path of approval. If we do nothing and this project were to fail and we won't do anything, the school department is still mowing the field as is. So it's almost procedural at this point that just once they see it, it's right there. Nothing's added. I would much rather have, as a taxpayer and a parent of kids involved in youth sports and a member of coaching in these several organizations throughout town, I would much rather have a new field there that's unmowed and we rely upon volunteers versus we have the conditions that are there now, because it's rocky. At times it could be unsafe depending on what part of the field you're on. I think it's nothing but a positive. When I spoke before the town council on this, everybody seemed energetic about it. I know, the maintenance is what's in question here, but as far as paying for it, it's CPC money that we're using for exactly what it's designated for. And if we don't use it, then sometimes this money can disappear. So personally, I'm all in favor with it, and everybody I've talked to is all in favor with it. And, we'll figure out the maintenance part of this. And if it falls to volunteers the way things used to be, then volunteers it will be, but that will be maintained.
Thank you, Mr. Thomas. Thank you, Mr. Higgins. Are there any other questions or comments or concerns from members? All right, hearing none, I will entertain a motion.
Motion to approve.
Motion to approve made by Mr. Lightford. Do I hear a second?
Second.
Seconded by Ms. Sullivan. Josh, can you take the roll call, please?
MJ,
Aye.
Rig,
I will abstain. However, I do support youth sports. My organization is about youth sports as well. But for conflict of interest purposes, I will abstain.
Matt,
Aye.
Mark.
Come back to me, please, Josh.
Sorry?
Can you come back to me at the end, please?
Okay. John,
No.
Dana,
Yes.
Chris,
I'm gonna say yes.
okay, and Mark.
Yes.
Thank you. The motion was approved.
All right, thank you, everyone. Let's see. All right, now that we've gone through our entire count of items here, we're now on item F, additional items for discussion. I don't necessarily have anything per se that the committee can talk about. I do want to note to the public, I believe we do still have at least one opening due to a vacancy created by one of our former colleagues several weeks ago. Josh, there haven't been any applications yet, have there? Do you know?
Not through us.
Okay.
It's a town clerk appointment.
Yeah.
She hasn't shared any prospective applicants yet.
Okay. So in the meantime, I will still encourage, if anybody watching tonight is still interested, since it is a town clerk appointment, you can submit your interest to be on our little committee to the town clerk, Miss Larson. I believe it is townclerk@bridgewaterma.org. Hasn't switched over to the .gov yet, correct, Justin?
Hasn't switched.
Okay, excellent. Alrighty, so that is the only thing I have. I don't believe we have anything else for this evening, so we will get to our favorite part. New members, you'll certainly enjoy this one every time. Item G, adjournment of meeting. So with that, I will entertain a motion. Oh, never mind. Hold on a second. Mr. Higgins, you are muted.
Oh, I'm sorry. I'm
That's all
sorry,
right.
MJ.
Mhm.
Permit the speaker to. I'd like to just see if the committee would be interested. We received all the financials and the general ledger and everything, and it's all wonderful stuff. Thank you, Lori, for getting it out. But is there a way that we could get that summarized at more of a top level? For example, so we could look at like revenue, actual, and then just where we are to the budget. And then if we go on the expense side, if we could look at it with salaries and benefits, total compared to where we are in the budget, and then debt and other liability payments compared to where we are in the budget. So we've got maybe 3 or 4 major categories, and it would give us a snapshot of what we're looking at in total. And are we on track? Are we not on track? Would that be something that Lori could provide for us? Or if there's other interest from the committee members, would that be something you'd want to see?
Sure. I already have the revenue, so I can break down the revenue at a top level. Our general ledger, for the expense side, I probably could do a high level salary, benefits, whatever, if that's what you're looking for. And if, the whole committee would like to see that, I'm happy to share that, and also put the offer out to you through the chair. If anybody, especially your newer members, you want to come on in and talk about any questions you have, or before we get cranking into the budget season, I would love to go over, especially the new people, like if you have any questions about municipal finance or how the town works, how the operations go. Justin and I have been trying to talk about, how we can best educate, especially the new people. And it's a good refresher for the people that have been on the committee for a while too, to just get a feeling of what your departments do for, what they spend time on, not just, the financial end of things, but what their missions are, and maybe help you understand how the government runs a little bit. So, that offer is always out there for everyone. Just, you have to go through the chair, And we can surely set some times up and some meetings, whenever you feel that you can. So thanks.
Okay, thank you, Lori, and thank you for that point of note, John. So with everything else being I will entertain a motion to adjourn.
Motion to adjourn.
Motion made by Mr. Thomas. Do I hear a second?
Okay.
Seconded by Mr. Knoll. Josh, can you take the roll call, please?
MJ,
Aye.
Rig,
Aye.
Matt,
Aye.
Mark,
Aye.
John,
Aye.
Dana,
Aye.
Chris.
Aye.
Thank you. The motion was approved. The meeting is adjourned.
All right,
Thank you,
we'll see you in
everyone.
a
Have a
couple
great
weeks,
week.
folks.